Have you ever wondered what's currently happening in the dynamic world of cryptocurrencies? If there's one word to describe the cryptocurrency market, it's volatile. Changes happen in a blink, and today, we're going to delve into the most noteworthy happenings in this ever-shifting landscape. Firstly, let's talk about regulatory developments. Governments around the globe are grappling with the rise of cryptocurrencies, leading to a shift in regulations. From taxation to anti-money laundering, the classification of cryptocurrencies is under constant discussion and evolution. Institutional adoption is another key trend. Cryptocurrencies are no longer a fringe interest. Investment firms, hedge funds, corporations, they're all hopping on the crypto train, adding digital currencies to their portfolios or offering crypto-related services. Then we have non-fungible tokens, or NFTs. These digital assets, representing everything from artwork to collectibles, have taken the world by storm. The rise of NFTs has led to a boom in marketplaces and platforms where these unique tokens are bought and sold. In the realm of decentralized finance, or DeFi, innovation is the name of the game. New protocols, projects, and platforms are being developed at a breakneck pace. Yield farming, decentralized exchanges, lending, and borrowing platforms are just some of the areas experiencing exponential growth. Layer 2 solutions are also worth noting. These innovations aim to address the significant challenge of blockchain scalability, with solutions like Bitcoin's Lightning Network and Ethereum's Optimism and Arbitrum improving transaction throughput. We can't ignore the environmental concerns associated with cryptocurrencies, particularly proof-of-work ones like Bitcoin. The discussion around sustainable mining practices and the development of eco-friendly blockchain solutions is gaining momentum. Lastly, we have central bank digital currencies, or CBDCs. These are digital currencies issued and regulated by central banks, aiming to modernize payment systems and provide a digital alternative to physical cash. The cryptocurrency market is indeed a whirlwind of constant change and innovation. Stay tuned as we delve into each of these fascinating topics. First off, let's talk about regulatory developments. Across the globe, countries are stepping up to the plate, introducing and updating regulations concerning cryptocurrencies and digital assets. The focus areas? Taxation, anti-money laundering, and the classification of cryptocurrencies. Taxation of cryptocurrencies is being addressed in innovative ways, as governments are trying to find a balance between encouraging technological advancements and securing their revenue streams. Anti-money laundering regulations are also being tightened to prevent illicit activities, with many jurisdictions now requiring crypto exchanges to perform KYC checks. As for classification, the question of whether cryptocurrencies should be treated as securities, commodities, or a new asset class altogether is a hot topic. This classification will ultimately influence how they are regulated. But remember, as with anything in the crypto world, the regulatory landscape is continually evolving, shaping the future of cryptocurrencies. Next up, we have the wave of institutional adoption. In recent years, we've seen a significant surge in the number of investment firms, hedge funds, and corporations dipping their toes into the world of cryptocurrencies. And it's not just about buying Bitcoin or Ethereum anymore. These institutions are expanding their horizons, exploring a range of crypto assets, and even offering crypto-related services. Why is this happening? Well, one major factor is the potential for high returns. Cryptocurrencies have shown they can deliver profits that traditional investment avenues simply can't match. And while they certainly come with a higher risk, the potential rewards are too enticing for many to ignore. It's not just about profit, though. Many institutions are recognizing the transformative power of blockchain technology and want to be part of this digital revolution. They see the potential for blockchain to change the way we do business, manage assets, and even govern societies. Institutional adoption is playing a crucial role in mainstreaming cryptocurrencies. Now let's discuss the rising star of the crypto world, NFTs. Non-fungible tokens, or NFTs, have taken the spotlight in recent times, revolutionizing the realm of digital art and collectibles. Unlike cryptocurrencies, which are fungible and can be exchanged on a like-for-like basis, NFTs are unique. Each token carries distinct information and cannot be directly replaced by another. This uniqueness has given rise to a whole new digital marketplace for artists, creators, and collectors alike. The surge in popularity of NFTs has led to a boom in marketplaces and platforms dedicated to their trade. From digital artwork to virtual real estate to tokenized tweets, the possibilities are endless. These platforms provide a space for creators to monetize their work in ways previously unimaginable, opening the door to a new era of digital ownership. Imagine owning an original piece of digital art, a virtual concert ticket, or even a piece of the digital universe. NFTs are revolutionizing the concept of ownership in the digital world. Moving on, we have the innovative world of DeFi. Short for decentralized finance, DeFi is making waves by reimagining traditional financial systems. It's a space that's constantly evolving, with new protocols, projects, and platforms emerging regularly. One area that's seen significant growth is yield farming. This innovative practice allows cryptocurrency holders to earn rewards by lending their assets to others on the network. It's a win-win situation where lenders earn interest, and borrowers gain access to funds they might not otherwise have. Then we have decentralized exchanges, or DEX. These platforms allow users to trade directly with each other, bypassing traditional intermediaries. They offer increased privacy, lower fees, and a greater degree of control over one's assets. And let's not forget the lending and borrowing platforms. These are changing the game by offering services similar to banks, but in a decentralized and transparent way. In essence, DeFi is revolutionizing how we interact with money. DeFi continues to push the boundaries of financial services. Next, let's delve into the crucial topic of Layer 2 solutions. Scalability, the capacity of a blockchain network to process a large number of transactions, is a significant challenge in the cryptocurrency space. The more transactions a network needs to handle, the more complex it becomes to maintain speed and efficiency. This is where Layer 2 solutions come into play. These solutions, which operate on top of the existing blockchain, aim to increase transaction throughput, thereby improving scalability. For instance, consider the Lightning Network for Bitcoin, which allows for faster and more cost-efficient transactions by creating payment channels off the main blockchain. Similarly, Ethereum has its own Layer 2 scaling solutions like Optimism and Arbitrum, designed to handle more transactions while maintaining security. By taking some of the load off the main blockchain, Layer 2 solutions aim to make blockchain networks faster, more efficient, and more scalable. Layer 2 solutions are key to enhancing the scalability of blockchain networks. Now, let's touch on a hot topic: the environmental impact of cryptocurrencies. The crypto space is not without its controversies, and one of the most heated debates revolves around the environmental footprint left by cryptocurrencies, especially those using the proof-of-work model, like Bitcoin. These digital currencies require massive amounts of energy for mining and transaction processing, leading to significant carbon emissions. But it's not all doom and gloom. The crypto community is well aware of these issues and is actively exploring sustainable mining practices. Some are turning to renewable energy sources, while others are developing more energy-efficient consensus algorithms, moving away from the energy-intensive proof-of-work model. Moreover, the development of eco-friendly blockchain solutions is gaining traction. These green initiatives aim to reduce the environmental impact of cryptocurrencies, making them more sustainable for our planet. Yes, the crypto world is not just about making digital transactions, it's also about making those transactions in a way that respects and sustains our environment. The crypto world is increasingly focusing on becoming more environmentally friendly. Finally, we arrive at our last topic: central bank digital currencies. Central bank digital currencies, often referred to as CBDCs, are a new and emerging concept in the world of digital finance. They represent a digital form of a country's fiat currency, issued and regulated by the central bank of that country. Unlike cryptocurrencies, which are decentralized, CBDCs are a centralized digital currency. This means that while Bitcoin, Ethereum, and other cryptocurrencies operate outside the control of central banks and governments, CBDCs are firmly within their grasp. They maintain the traditional banking structure, with the central bank at the top, overseeing the digital currency's distribution and regulation. So, why are central banks interested in CBDCs? Well, there are a few key reasons. Firstly, they can help modernize payment systems. By utilizing blockchain technology, CBDCs have the potential to make transactions faster, cheaper, and more secure. This could be particularly beneficial for cross-border transactions, which are currently often slow and expensive. Secondly, CBDCs provide a digital alternative to physical cash. As our world becomes increasingly digital, cash usage is declining in many places. CBDCs offer a way for central banks to keep up with this trend while maintaining control over the currency. Several central banks worldwide have shown interest in CBDCs. Some, like the People's Bank of China with its digital yuan, or the Central Bank of the Bahamas with its sand dollar, have already launched pilot projects. Others, like the European Central Bank and the Federal Reserve, are still in the research and exploration phase. However, it's important to note that while CBDCs offer many potential benefits, they also come with risks and challenges. These include concerns about privacy, cybersecurity, and the potential impact on traditional banking systems. It's a complex issue that will require careful thought and regulation. CBDCs could potentially redefine the future of money. They represent a significant shift in the way we think about and use currency, blending the boundaries between the physical and digital worlds. As we move forward, it will be fascinating to watch how this space evolves. That concludes our journey through the current state of the cryptocurrency market. We've navigated the challenges and opportunities presented by regulatory developments, institutional adoption, the rise of NFTs, DeFi innovations, Layer 2 solutions, environmental concerns, and central bank digital currencies. The cryptocurrency landscape is ever evolving, brimming with technological advancements and regulatory shifts. It's a thrilling ride that requires constant vigilance and curiosity. Remember, the cryptocurrency market is highly dynamic, so stay informed and keep exploring.
Have you ever wondered how to accumulate Bitcoin? Well, you're not alone. The world of cryptocurrency is vast and can sometimes feel overwhelming. But fear not, because today we're going to break down the ways to accumulate Bitcoin so you can find the method that suits you best. First up, the most common method, buying on an exchange. Cryptocurrency exchanges are platforms where you can purchase Bitcoin using traditional currency, such as US dollars or euros. It's as simple as registering on an exchange, depositing funds, and buying Bitcoin at the current exchange rate. But what if you're looking for a more hands-on approach? That's where mining comes in. Mining involves verifying and adding transactions to the Bitcoin blockchain. For this process, you're rewarded with newly minted Bitcoins. However, bear in mind that mining requires specialized equipment and significant energy consumption. It's not necessarily the best method for beginners. Now, let's talk about receiving Bitcoin as payment. Yes, you heard it right. You can actually receive Bitcoin as compensation for goods or services you provide. A growing number of companies and entrepreneurs are accepting Bitcoin as a form of payment. Have you heard about loyalty and reward programs? Some companies offer Bitcoin as a reward for participating in their programs. This could involve filling out surveys or performing other online actions. It's a fun way to earn some Bitcoin while doing things you'd probably do anyway. Next, there's receiving Bitcoin as a gift. It might be a birthday present from a tech-savvy friend or even part of an inheritance. And finally, if you're feeling adventurous and you have trading skills, you can try to earn Bitcoin by trading. This involves profiting from the difference in Bitcoin's price through active trading on cryptocurrency exchanges. So there you have it. A quick rundown of the different ways to accumulate Bitcoin. Remember, when choosing a method, consider your financial capabilities, your goals, and your level of knowledge about cryptocurrency. And don't forget about security. Always choose reputable and reliable platforms for your Bitcoin operations. Bitcoin accumulation doesn't have to be a mystery. With a bit of knowledge and the right approach, you can start building your Bitcoin portfolio today. And who knows? Maybe one day you'll become a Bitcoin millionaire.
Have you ever wondered how decentralized finance works? Just imagine a financial system that operates without a central authority, like banks or governments, where transactions are open, transparent, and immutable. Welcome to the world of decentralized finance, or DeFi for short. DeFi is a revolutionary financial model that leverages the power of blockchain and cryptocurrencies. It's like a vast, open field where traditional financial instruments are reimagined and new ones are born, all without the gatekeepers of the old world. Here's the twist. It's not just a theoretical concept, but a living, breathing ecosystem that's growing and evolving right now. Decentralized exchanges, lending platforms, insurance protocols, it's like a whole new financial universe is being built, block by block. So, how does it work? At its heart, DeFi uses blockchain, a distributed ledger technology, to remove intermediaries from financial transactions. This means you can send, receive, borrow, lend, earn interest, and even speculate on price movements, all on your own terms. The cornerstone of this system is cryptocurrency. These digital assets, built on blockchain, serve as the fuel that powers the DeFi engine. But unlike traditional money, they're not issued or controlled by any central authority. This gives you, the user, an unprecedented level of control and freedom. One of the key advantages of DeFi is that it's open to everyone, everywhere. You don't need to pass a credit check or have a bank account. If you have an internet connection and some cryptocurrency, you're in. This opens up financial systems to billions of people who've previously been excluded, creating a truly global financial system. Another major advantage of DeFi is transparency. Every transaction on the blockchain is publicly visible. This means you can see exactly what's happening with your money, giving you an unparalleled level of trust and security. But it's not all smooth sailing. There are risks and challenges that come with this brave new world. Understanding these is key to navigating the DeFi seas successfully. Now that we've laid the groundwork, let's delve into some of the key aspects of DeFi. One of the most important aspects of DeFi is the concept of irreversible transactions. In the world of decentralized finance, blockchain technology is the backbone that supports many cryptocurrencies. This advanced technology is what makes transactions on these platforms irreversible. But why is this important? Well, imagine you're conducting a transaction. Once it's done. There's no going back. That's what we mean by irreversible. This aspect of DeFi provides a robust layer of security that traditional financial systems often lack. You see, blockchain records every transaction across multiple computers spread around the globe. This distributed ledger system ensures that once a transaction is made, it can't be altered or deleted. It's like carving your transaction into stone. This immutability guarantees the reliability of transactions. It eliminates the risk of double spending, fraud, and manipulation, providing a secure and trustworthy environment for financial activities. Irreversible transactions are a key factor in the security and reliability of DeFi. Now, let's talk about smart contracts. These aren't your average everyday contracts. Smart contracts are an evolution of contractual agreements, brought to life by the magic of code and the power of the blockchain. Picture this: a contract that doesn't need a lawyer, a notary, or even a handshake to enforce. That's what a smart contract is. It's a piece of code that automatically executes and enforces the terms of a contract upon certain events. No need to trust in centralized institutions or third parties. Whether it's a simple transaction between two parties or a complex multi-step agreement, the smart contract makes it happen, reliably and transparently. This automation not only reduces the chance of errors but also increases efficiency and security. It's like having an unbiased, incorruptible mediator who works tirelessly 24/7, ensuring everything goes according to plan. Smart contracts are an integral part of DeFi, offering a trustless and efficient way to conduct transactions. Blockchain technology is not limited to financial transactions. Indeed, its applications are as broad and varied as the innovators who harness its potential. From finance to gaming, file-sharing networks and beyond, blockchain is redefining the way we interact with digital assets and information. Consider the finance industry. Blockchain has enabled decentralized finance, or DeFi, a system that empowers individuals to control their financial destiny, sans intermediaries. Then there's gaming. Blockchain is turning virtual goods into verifiable, tradable assets, giving gamers real-world value for their digital victories. File-sharing networks, too, are benefiting from blockchain's immutable ledger, providing a reliable, transparent system for peer-to-peer exchanges. And these are just a few examples. Every day, new applications are being developed, leveraging the security, transparency, and decentralization that blockchain offers. This technology is not just about cryptocurrencies, it's a powerful tool for a vast array of digital interactions. Blockchain applications are expanding far beyond the financial world, showing the versatility of this technology. Privacy and anonymity have always been a cornerstone of the crypto world. Think about it. In the traditional financial ecosystem, your transactions are linked to your identity, accessible by banks, governments, even hackers. Cryptocurrency, on the other hand, offers a different perspective. New cryptocurrencies and technologies are being developed with a focus on providing user privacy and anonymity. This isn't about fostering illegal activities, but about granting individuals control over their own data. It's about the freedom to choose what you share and with whom. Take for instance privacy coins like Monero and Scash. They use sophisticated technologies to obscure transaction details, making it virtually impossible to trace back to the users. Similarly, advancements in blockchain technology are driving the development of solutions like zero-knowledge proofs, further enhancing privacy. In a world where privacy is becoming increasingly important, DeFi provides a way to conduct transactions anonymously. This is the promise of privacy and anonymity in the world of decentralized finance. With the growing popularity of DeFi, scalability has become a key issue. It's about accommodating an ever-expanding user base and handling growing transaction volumes without compromising efficiency or speed. Imagine a highway, initially built for a small town, now needing to cater to a bustling city. That's the challenge DeFi faces. In response, innovators are working tirelessly to increase transaction processing speed and blockchain scalability. They're developing solutions like sharding, where the blockchain is broken down into smaller pieces, each capable of processing transactions independently, or Layer 2 solutions, creating a secondary framework that sits atop the main blockchain, processing transactions more quickly before recording them on the main chain. These are just a few examples of the ongoing efforts to improve scalability. It's a complex yet crucial task. As more people embrace DeFi, the demand for fast, efficient transactions will only grow. Scalability is crucial to the future growth and success of DeFi. Let's now turn our attention to stablecoins. Imagine a cryptocurrency with all the revolutionary potential of decentralization, but without the wild price swings. That's the magic of stablecoins. These are a unique type of cryptocurrency that are pegged to a stable asset like the US dollar or gold. This pegging helps to reduce the volatility that's often associated with cryptocurrencies. Instead of waking up to find your digital assets have suddenly swung in value, with stablecoins, you get the assurance of stability. This stability makes them highly convenient for everyday use. Think of paying for your coffee with Bitcoin on a day when the market is in a slump. Not so appealing, right? But with stablecoins, that's not a concern. The value remains stable, making them an excellent choice for everyday transactions. Stablecoins offer a way to reduce the volatility often associated with cryptocurrencies, making them more practical for everyday use. We've covered a lot of ground today, so let's summarize. Decentralized finance, or DeFi, is a revolutionary financial model based on cryptocurrency and blockchain. It's like a new world of finance where traditional intermediaries are replaced by technology, offering unprecedented levels of security, reliability, and freedom. A crucial aspect of this model is the irreversible nature of transactions. By utilizing blockchain technology, DeFi ensures that once a transaction is made, it's there, permanently etched on the blockchain, offering both parties peace of mind. Then we have smart contracts, the code that automatically executes and enforces the terms of a contract upon certain events. It's like an unbreakable pact where you don't have to trust any central authority, but rather, you trust the code. Expanding from this, blockchain technology is not just confined to financial applications, it's a versatile technology, paving the way for innovative applications across numerous sectors, including gaming, file-sharing networks, and more. Privacy and anonymity are also important facets of the DeFi ecosystem. With the development of new cryptocurrencies and technologies, users can conduct transactions with the assurance of their identities being protected. And let's not forget scalability. As the transaction volumes grow, so does the need for faster transaction processing and increased blockchain scalability. The DeFi community is tirelessly working on solutions to ensure the efficiency and feasibility of cryptocurrencies. Finally, to bridge the gap between the volatile crypto world and the more stable traditional assets, we have stablecoins. These are cryptocurrencies pegged to stable assets like the US dollar or gold, offering convenience for everyday use while reducing volatility. As we've seen, decentralized finance is a rapidly evolving field, and these are just some of the key aspects that are shaping its future. It's like a financial renaissance where the old ways are being replaced by innovative, technology-driven methods. The impact of these changes is vast and far-reaching, promising a future where finance is truly decentralized, democratized, and accessible to all.